Have you heard about HDFC Bank's first ever bonus issue? Well, it's a fascinating development in the world of finance with the potential to reshape the investment landscape. Let's dive into the details. HDFC Bank, a prominent player in the Indian banking sector, is offering a bonus issue at a ratio of 1:1. Now, what does this mean? Simply put, for every share an investor holds in HDFC Bank, they will receive an additional share at no extra cost. This is indeed a noteworthy move, marking the bank's inaugural issuance of bonus shares. But why would a bank do this? A bonus issue is a corporate action in which a company rewards its shareholders with additional shares. It's a way of returning profits to investors without draining the company's cash reserves. HDFC Bank's decision to issue bonus shares signals a strong balance sheet and a commitment to investor rewards. So what's the catch? Well, there isn't one really. But it's worth noting that while the number of shares you hold will increase, the total value of your investment remains the same. This is because the market price of each share adjusts to the increased supply. However, the bonus issue can enhance the liquidity of the shares and make them more affordable to a larger pool of investors. Now let's shift our focus to the implications for the bank. A bonus issue can bolster a company's perceived value and attract more investors. It can also lead to a healthier equity base and enhance the company's borrowing capacity. It's a strategic move that can potentially pave the way for future growth. So, as an investor, you might be wondering, should I buy shares to qualify for this bonus issue? Let's delve into HDFC Bank's recent financial performance. In the first quarter of the financial year 2026, HDFC Bank reported a notable 12% increase in net profit. This is a solid improvement, particularly when we consider the challenging economic climate we're navigating. It's a testament to HDFC Bank's resilience and strategic financial management. But what does this 12% increase in net profit really mean? Well, it's a clear indicator of the bank's profitability. It shows that HDFC Bank is not just surviving in this economy, but indeed thriving. It's making more money from its operations, which is always a positive sign. However, it's not just about the profit increase. This rise points towards the bank's overall financial health and its ability to generate earnings. It's a reflection of the bank's operational efficiency, cost management, and its ability to leverage opportunities in the marketplace. Analyzing this, we can infer that HDFC Bank is well positioned in the financial sector. Its strong performance is likely a result of a well-diversified portfolio, robust risk management strategies, and a keen understanding of the market landscape. But remember, while these numbers are certainly promising, they are just one piece of the puzzle. We should also consider factors such as the bank's revenue growth, its return on equity, and the quality of its assets. These elements provide a more comprehensive view of the bank's financial position beyond just its net profit. Looking ahead, it's reasonable to expect HDFC Bank to continue on this upward trajectory. The bank seems to be on a growth path backed by its strong financials and strategic initiatives. But as always in the world of finance, there are no guarantees. Various factors, including market volatility and regulatory changes, could impact future performance. Strong financial performance is always a good sign for investors, but it's important to look at the bigger picture. How does HDFC Bank's bonus issue fit into the broader market context? To fully appreciate the significance of HDFC Bank's bonus issue, we need to take a look at the wider market landscape. The market is buzzing with activity, with companies and stocks jostling for attention. Among the top trending stocks, we've got SBI, Axis Bank, Infosys, Wipro, and NTPC, each with their own unique narratives and trajectories. Infosys and Wipro, both giants in the IT sector, have been making waves in the market with their steady growth and strong performance. On the other hand, SBI and Axis Bank, two of India's leading banking institutions, have been witnessing a surge in their share prices, driven by robust earnings and promising forecasts. Interestingly, NTPC, a major player in the power sector, has been attracting investor interest with its ambitious expansion plans and strong financial health. Amidst this dynamic landscape, HDFC Bank has entered the arena with its first ever bonus issue. Now, in the grand scheme of things, HDFC Bank's bonus issue is likely to have a substantial impact on the market. As one of the largest banks in India, any move made by HDFC Bank is closely watched by investors. Given the 1:1 ratio of the bonus issue, we can expect a spike in the bank's share trading volume, potentially influencing overall market sentiment. This bonus issue could also trigger a domino effect, prompting other companies to follow suit and offer bonus issues of their own. This could lead to a flurry of activity in the market, increasing liquidity and possibly driving up share prices. But it's important to remember that the market is a complex entity, influenced by a multitude of factors, from economic indicators to geopolitical events. So while HDFC Bank's bonus issue is indeed a significant event, it's just one piece of the larger market puzzle. Indeed, market conditions can greatly influence an investor's decision to participate in a bonus issue. As an investor, what should you consider before jumping on this bonus issue? Investing, like any strategic game, requires a keen eye for detail and understanding of the landscape. In this case, the landscape is HDFC Bank's first ever bonus issue. Before you decide to dive in, there are a few key factors you should ponder. Firstly, consider the bank's financial performance. HDFC Bank reported a 12% increase in net profit for the first quarter of the fiscal year 26. It's a healthy sign indicating the bank's robust financial health. But remember, past performance is not an indicator of future results. Therefore, it's essential to stay updated with the bank's recent financial disclosures and management commentary. Next, the market conditions. The stock market is a dynamic arena influenced by a multitude of factors, from geopolitical tensions to economic indicators. Make sure you have a grasp on the current market sentiment and trends. Are we in a bull market where prices are expected to rise? Or are we facing a bear market with falling prices on the horizon? Then there's your personal investment strategy. What are your investment goals? Are you looking for long-term growth, or are you more interested in short-term gains? Your risk tolerance also plays a critical role. Can you stomach the volatility that comes with investing in the stock market, or do you prefer a more stable, less risky investment? Lastly, don't forget the golden rule of investing. Never invest money that you cannot afford to lose. Make sure you have an emergency fund set aside and that your basic needs are covered before you start investing. The HDFC Bank bonus issue might seem like an attractive opportunity, but it's vital to weigh all these factors before making a decision. After all, investing isn't about following the crowd. It's about making calculated decisions that align with your personal financial goals. Investing is not a one-size-fits-all game, and it's crucial to make informed decisions based on your individual circumstances. So, what's the final take on HDFC Bank's first ever bonus issue? Let's quickly recap what we've discussed so far. Remember, HDFC Bank is offering a 1-to-1 bonus issue, marking its first ever. This means that for each share you own, you're entitled to one additional share at no extra cost. The record date has been set for August 26th, so the clock is ticking if you're considering this opportunity. We've also observed that HDFC Bank reported a 12% increase in net profit for the first quarter of the fiscal year 26, which is a positive sign of the bank's financial health. This could potentially mean a more promising return on investment for shareholders in the long run. Now, let's revisit the market context. We're in a dynamic financial landscape with stocks like SBI, Axis Bank, Infosys, Wipro, and NTPC creating waves. It's important to keep in mind the broader market trends and movements when making such investment decisions. Of course, every investor's situation is unique. It's crucial to consider your own financial goals, risk tolerance, and investment horizon. Will this bonus issue align with your portfolio strategy? Are you comfortable with the associated risks? These are questions only you can answer. In conclusion, HDFC Bank's bonus issue presents an intriguing opportunity. It's a chance to potentially increase your holdings in a well-established bank that has demonstrated solid financial performance. However, as with any investment, it requires careful consideration and a well-informed decision. Whether you decide to participate in HDFC Bank's bonus issue or not, the most important thing is to stay informed and make decisions that align with your investment goals. Stay tuned for more updates on the latest market news and trends.